I mean, Bitcoin is the hurdle rate, and it can be applied to equity, but now it can also be applied to credit. And then, yeah, like to your point, I think it makes a lot of sense to be that a lot of Bitcoiners don't understand this, because it kind of comes to this thing that we talked about before, right? You have like the Bitcoiner, the people who understand Bitcoin, and then the people who understand credit. But if you like Bitcoin, you kind of understand that we live in a debt-driven world, and that credit is not like necessarily a good thing. People who invest in Bitcoin are not really your average credit investor, right? And your average credit investor is also not your average Bitcoin investor.
No, they're opposite.
Definitely not, right? It's the complete opposite. But Bitcoin can create a lot of value for credit investors, maybe without them really noticing or even needing to know, really. And yeah, that's really where the power of this sits. But that's also why it's a bit this hidden truth, right?
Yeah.
Because there are just not that many people that understand.
Before we begin, let's make something clear. All views expressed in this podcast by me or my guest are purely our personal opinions. Nothing we say should be treated as a recommendation or an inducement to make any specific investment or to follow any particular strategy. This podcast is for informational and educational purposes only. It does not constitute financial, investment, legal, or tax advice. Before making financial decisions, you should do your own research and consult with a qualified professional advisor.
Welcome to a new episode of the Digital Credit Frontier. Today, I'm honored to have as a guest Tycho Onnasch. Tycho, welcome.
Thank you. Thanks very much. Thanks for having me.
So I'm really looking forward to this conversation. I have a bit of a cold, so I won't do the talking as much. So I'll leave the talking to you. Yeah, Tycho, he is co-founder of the Zest protocol, and Tycho is head of Bitcoin strategy at Treasury. For the people who don't know, could you give a summary of your background and maybe how you came about to Bitcoin?
Yeah, no, absolutely. That first of all, thanks very much for having me, and yeah, very excited to dive into all of these things. But yeah, maybe a little bit about me is that I spent most of my professional life kind of on one question so far, which is how to turn Bitcoin from an idle asset into productive capital. That's kind of what the past 5-6 years have been about for me, and I'm kind of doing that in two ways, right? So first of all, and that's what I also started with, is to plug BTC into the world of on-chain finance, right? So to plug Bitcoin into the world of generating yield on it through smart contracts, right? And this whole financial ecosystem that's emerged on chain more recently, right? The decentralized finance ecosystem, and that's what Zest protocol does, right? So Zest protocol is a decentralized finance protocol, and people can come there to borrow assets against their Bitcoin, right? Primarily USD stablecoins, and Zest protocol has about $100 million in assets under management, fully non-custodial, sitting in smart contracts. And then the second way, that I'm kind of doing that, right? So focusing on that mission of turning Bitcoin from idle assets into productive capital is Treasury, right? And what Treasury does is plugging Bitcoin into the traditional finance ecosystem, right? So whereas Zest protocol kind of plugs Bitcoin into the on-chain financial ecosystem, Treasury plugs it into the traditional financial ecosystem. And it does that, or it aims to do that, by kind of borrowing from the MicroStrategy playbook and securitizing Bitcoin, and in that sense, like embedding it very deeply in the financial system, and essentially using Bitcoin to create products that are very compelling for traditional finance investors.
Yeah, I mean that sounds great, and I think a lot of people say that Bitcoin is an idle asset. It has a very high CAGR, so compounded annual growth rate. So a lot of people also telling, like, you don't need to create extra yield on that Bitcoin. But like, I'm fascinated about it too. We might not need it now as much, but I think we will need it in the future, or it's always like a nice extra to have. And I think it's a natural way of capital to be used to add more value.
Yeah, absolutely. I mean, look, Bitcoin is perfect without any of these things, right? It's like a really great invention. It's one of I think the great inventions of our time. But it can be used, right, as productive capital.
Yeah.
Obviously, doesn't need to happen, right? But it can be used as such, and then people will do that, and you can essentially use it, in our capitalist system, right, to essentially create value for all kinds of different investors, right? So that's really like the mission here. So we're obviously not saying that Bitcoin is one thing and not another thing, or trying to make a certain point against maybe certain Bitcoiners who believe one thing. No, it can be done, and the great thing that everyone believes in Bitcoin is freedom, right? So
Yeah.
But yeah, broadly, I think it's very interesting to embed Bitcoin more deeply in the financial system, and there's a lot of ways that it can create a lot of value for people.
Yeah. So you studied history. Did you study like history on a broad topic, or like the history of finance? And I talked to a lot of Bitcoiners in the last couple of years, and I noticed a pattern that people who are coming from like a computer science technical background, they're really focused on the technical efficiencies that Bitcoin has, and are a bit more prone to go to crypto because they're really focused on the technical side of money. And people who are coming more from a philosophical and more like you, I think, but that's gonna be my question. Like, from a history background, they're more focused on the monetary side of Bitcoin. Is that correct?
Yeah, I mean, I think it kind of comes in both ways, right? But things are relevant because they exist in a society, right? And they're perceived by people, and they have certain frames in their mind, which come from somewhere, right? From history, in a way, and to understand these new technological developments, right? And I think the historical angle to Bitcoin is very interesting, but maybe not in ways that most people think, right? Because people often think something like, history repeats itself, right? Or history rhymes, or something like that. Whereas, what I think, or, what I've kind of learned while, spending all these years, like, studying history and studying economic history, is that more often than not, people are at all points in history are confronted with a reality that's radically new. And so people who lived during, the First World War were like, wow, we're like suddenly faced with a radically new reality, and we have to get to grips with that. The same people during the Second World War, same when the Cold War started. It's like every time it's radically new, and people either grapple with that, so they kind of find a way to live with that and create value in those environments, or they don't, right? And in many ways, like, history is the story of people constantly dealing with things that are radically new. And I think Bitcoin is, again, one such thing. It's something that's never existed in the history of the world. It has some analogies with gold, but in some ways it's also very, very different. And it will fulfill like a radical new role in our society. So I think that's mainly what really excites me. I was like, hey, like, all these people in these history books, they go through these radical transformations, and it's in many ways very scary for them, but in other ways also very exciting. And what can I participate in my time, right? That is a radical change, and that's definitely Bitcoin.
Yeah, I totally agree. Before we dive into the topic of digital capital, equity, credit, how did you experience Bitcoin Amsterdam? Because Treasury acquired the conference, you as a head of strategy for them, yeah, it should be like a unique experience. So can you tell me something about it?
Yeah, absolutely. I would also be very curious for your experience of Bitcoin Amsterdam. But the way that I experienced it is, yeah. So for context, right? So Treasury, the Bitcoin Treasury company in the Netherlands, acquired Bitcoin Amsterdam, right, and organizes it together with BTC Inc., which is the company behind the Bitcoin conference in the US, right, run by David Bailey, who sort of famously is the guy who convinced Donald Trump of Bitcoin. And yeah, I've been to every single edition of Bitcoin Amsterdam, right? So this was, I think, the fourth or the fifth edition. I can't remember exactly. I spoke at the very, very first one. But what I usually found at the previous editions of Bitcoin Amsterdam was that it was a little bit of a copy paste of an American formula, right? It was sort of like certain speakers, certain topics that are very interesting for the kind of American audience, and they were kind of like brought over naturally, right, by BTC Inc. And what I thought was really nice this time around, right, with us being involved as Treasury, is that we could, give the conference itself a bit of a European footprint, right? And of course, like we did that by, bringing the finance minister of Luxembourg, right, who gave a big message in support of Bitcoin, right? Luxembourg hodls is what he said on stage, and I think that reached a lot of media outlets around the world and on X as well. And yeah, but also like sort of over time, like kind of making it more European, right? Like also telling the European story for why Bitcoin is interesting. And yeah, and essentially like embedding Bitcoin more deeply into in Europe, which is kind of what we're all about. So in that sense, it was a really great success. I think. I mean, many things that can also be improved, right? As you always come to. But yeah, we're looking forward to next year already.
Yeah, awesome. So yeah, I went.
But yeah, what was your experience?
Yeah, I went to other Bitcoin Amsterdam conferences in past years too, and I like this one a lot because it was more heavily focused on Bitcoin Treasury companies. I think mostly because of Treasury acquiring the conference. For me, there was a plus because this is a topic that I like. I like to think about. I like to write about for the Bitcoin layer. I heard also from people that they found it a bit too much on a Treasury side, but I think eventually, as a conference, you also need to show your own colors, your own thoughts, and I think this is a great way to convey a message that Treasury wants to get out there. And this way, conference can also be complementary to each other. The one is more focused on, I don't know, cypherpunk, run your own node, while this conference has had all those topics as well. But maybe a bit more on the
definitely
side.
Definitely. I mean, you see it a lot too, right? That these I mean, every year there's sort of like a new theme that's really captures the imagination in Bitcoin. I used to say like last year, I would say that was really the sort of runes and ordinals kind of revolution, right? And then you probably saw that most panels sort of had some angle, around this, right? Like ordinals, like the way you can embed images directly on the Bitcoin blockchain, or runes, you can, launch tokens on Bitcoin. And of course now, we just came after, this sort of massive bull cycle in Bitcoin treasury companies. So yeah, I think that was also maybe a little bit of an effect of the market timing we're in, but yeah, point taken.
Yeah. So, before we were talking about Treasury, I want to get could you give us, like the audience, a primer on, like in your words, in simple terms, what is the idea behind treasury companies, Bitcoin treasury companies, and Bitcoin-backed credit instruments?
Yeah, I think a very important thing to cover, right? An important thing to dive into. Like if I would have to sort of answer it in one sentence, right? Like a Bitcoin treasury company exists to securitize Bitcoin, right? And to embed Bitcoin in the financial system. But that maybe sounds very abstract, right? If you maybe don't necessarily have experience working in finance or something like that. To most people, it sounds very abstract. And I think a good model or a good thing to think about, or a model to use to think about what this means, is what the mortgage market did for real estate as an asset. So housing, right, didn't used to be a financial asset. This is like a concept of like the last 50, 60 years, maybe a bit longer in the United States. But, it used to be, you build a house and at some point falls apart and you kind of need to rebuild it or something like that. So a house is more like a car or like, some clothes that you need to replace at some point. But at some point, housing became financialized and securitized as well. And what that means is that, those hard assets like houses were wrapped into into all kinds of financial instruments, right? Be it like essentially, mortgage bonds or some derivatives of that, convertible debts, preferred securities. So basically, houses as a hard asset were wrapped into all these different wrappers that were very useful to own for investors. And that's essentially what a Bitcoin Treasury company also aims to do, but then with Bitcoin, right? So to essentially wrap a hard asset, Bitcoin, into all these different financial products that that traditional investors have very strong demand for. So essentially fulfilling a demand that comes out of the financial system with the benefits that a hard asset offers. And that's really like what what a Bitcoin Treasury company kind of exists to do.
Yeah, and so for this podcast, I also want to explore like different angles, and also I want to also be the advocate of the devil, because I don't want to be only positive, not only negative, just
Of course.
objectively. And something I wrote something down while you were talking about houses becoming financialized. So first it was only used for the utility. Like you said, like a car, it's only used for the utility, and then after that it became financialized. Is that because of the lack of good money?
I think that's definitely one explanation, right? Around the time in which sort of the financialization of housing really started to kick in is also the time in which the world broadly moved off like the old remnants of the gold standard that were still there, right, in the early 70s. So yeah, there's definitely some truth to that. And that there's like kind of a lack of hard money or hard assets, and that then people are trying to save in real estate, right, or essentially use other things for saving because they realize that the currency over time depreciates, right, or loses value. So I think that's definitely one explanation. But I think the most important thing to take away from it is that it happened, right? Because there was some demand that came out of this fiat financial system that could be fulfilled with this product. Now, instead of like fulfilling it with a product that comes out of housing, let's fulfill it with a product that comes out of Bitcoin and that is accretive to Bitcoin, the assets, right? So that would probably be a much better thing to do. That would probably be much better for society, right? It would ease a lot of pressures, right, off things like the housing market, and in that sense can fix a lot of things, right? But I think you're definitely, the intuition there is definitely right. Probably reality is maybe a little bit more complex than a yes and no answer.
Yeah,
but yeah, I think you're definitely thinking in the right direction there. Yeah,
and also with housing, so the securitization of mortgages is like MBS, like the mortgage-backed securities. We also have seen that going wrong in 2008 with the CDOs and the synthetic CDOs. And so how do we, I mean, this is maybe also a bit of ahead of ourselves, but I think we should
avoid it going wrong, right? Yeah, no, absolutely, right? Because I think we've all seen. I think everyone knows these instruments from the housing market from this film, The Big Short, right? Where they're sort of like for the first time they're like, oh wait, there's like all these products that were created on top of housing, and oh, of course that blew up, right? That was like this is a huge Ponzi scheme and so on. But these products still exist today, right? And they also existed before. So there's ways in which they can be dangerous for financial stability, but also ways in which they can be very good for the financial system. And of course, if you take things too far and you create way too much leverage in the system, then things can blow up, right? So in some time in 2008, the amount of money that was betting on the US housing market was by far exceeded the total value of the US housing market. So that's a bit of a crazy reality, right? That would be like, we're nowhere near that with Bitcoin Treasury companies, right? Like that would be like that Michael Saylor and, Treasury in the future and Metaplanet have created so much financial instruments on top of Bitcoin that it exceeds the market cap of BTC, the assets, right? Which is not the case today, but by far. Maybe MicroStrategy has about, maybe optimistically about $1 billion of these things outstanding. The total market capitalization of Bitcoin is 2 trillion. So that's way less than 1%. So we're in very, very safe territory. But at the same time, these instruments like create a lot of value for insurers, for pension funds. I mean, this is basically the foundation of an economy, and yeah, the things we need for our current institutions to thrive, right? So Bitcoiners always say this thing like, "Fix the money, fix the world." So okay, like maybe it's not that easy. Like, yeah, we need to fix the money and fix the world, but in between there will be a lot of steps, right? We need to fix the insurance companies, we need to fix the banks, we need to fix, the pension funds, all of these things, and yeah, that's what we can do with Bitcoin treasury companies.
Yeah, so you've mentioned the total amount of the, I would call it the digital credit market. We're currently at 8 billion notional value.
Okay.
So, and I will maybe we'll come back to that because I want to talk about the price action of those instruments. But let's first, because you've mentioned like the word Ponzi scheme, and you also tweeted out on December the 1st on X, like everyone who only knows hard money suddenly thinks MSCR is a Ponzi scheme. I highly recommend Finance 101. Can you elaborate on that, please?
Yeah, that was a bit of a flippant tweet. I think if you look at the Bitcoin price chart of December 1st, right, of this year, 2025, well, you'll find that Bitcoin was quite low then, but also there was a lot of fear in the market, right? Everyone was suddenly very scared, and everyone was thinking, "Oh, Michael Saylor is going to blow up," and there was the full FUD was coming out. And yeah, I think that just the interesting thing about Bitcoin treasury companies and why I think it's kind of an asymmetric opportunity is that you have people in the world who understand Bitcoin, right? And you have people in the world who deeply understand finance. But the overlap between those two, right? People who understand Bitcoin and people who understand finance is very small, right? And that little overlap, that's where the people who currently understand Bitcoin treasury companies sit. And it feels like it's a small group, but it's a small group that's kind of discovered a certain truth, right? That is hidden from people who only understand Bitcoin, or is hidden from people who only understand finance. And that's why it's a really, really exciting opportunity. But yeah, in relation to, I think, a lot of misconceptions that exist about MicroStrategy, right, is that, well, for example, it still happens a lot that people come to me and they say, "Oh, Michael Saylor bought all his Bitcoin for an average cost price of $70,000 or $74,000. So if it goes below that, then he has to sell." Right?
Yeah, he gets liquidated.
Yeah, exactly. Which is just not true, right? Or people say, only if Bitcoin drops by like 95% or something could that be a possible reality. And the same, like a similar example, is when a lot of people seem to think that MicroStrategy is trading, like the stock is trading below its net asset value, right? Below its NAV, so below the value of the BTC, which is also wrong because people are just counting the common stock and they're not counting the convertible instruments. They're not counting the pref securities, right? And they're not counting enterprise value, which is sort of how you should count these things. So yeah, there are a lot of misconceptions, around Bitcoin treasury companies, and I think it's very important to understand this because, MicroStrategy has probably been the largest buyer of Bitcoin in the last 2 years, and it's been driving the Bitcoin market to a large extent, right? So if you hold Bitcoin and you like these assets, you should probably, or at least that was my intuition. I was like, I should probably understand how this works because this is a very big driver, and it's a bit embarrassing that I maybe don't know how this exactly works, right? So that's kind of what I would recommend to Bitcoiners. It's like, if you don't fully understand MicroStrategy, but you do care a lot about Bitcoin, then yeah, it's probably a great thing to look into.
Yeah, and that's why I really appreciate you making time to come on this podcast, because this is exactly the goal of this podcast, to inform people, to educate people, but also to ask the hard questions. And I want to come back to the like Preston Pish also mentioned this Venn diagram of like Bitcoin, the equity market, the credit market, and there in between there's like this little sweet spot, and it's difficult for people to really know all these different markets and then get an idea of if it's good or not, and to formulate and like an educated opinion about it. Yeah.
Definitely, and also think about how like impactful Bitcoin treasury companies are, right? It's like I think a lot of people were a bit, the Bitcoin ETFs launched, and they're like, oh well, how well is it going to go? Is there going to be demand, right, from equity investors to buy Bitcoin? Well, we saw what happened, right? Like Bitcoin went from like 30,000 or something that it was like all the way to 125,
And
and
it's
this is like I think
the
it's a
best performing
similar ETF
ETF.
moment, right? I think it's a
Yeah.
similar ETF moment to have fixed income, right? Also coming around Bitcoin, but yeah.
Yeah. So first, let's talk about Treasury, or talk about everything you can talk about, because I think there's a lot of you cannot talk about. But Treasury is now a BV in the Netherlands, and it's doing a reverse listing with MKB Medsense, who's already on the Amsterdam Euronext stock exchange. And I think I listened to another podcast of you at Bitcoin Yield, and I think that was the primary goal, to get on like a big exchange, right?
Yeah, exactly. So essentially, what like the sort of the reason behind Treasury's existence, right, is that we see that Bitcoin treasury companies are hugely successful in the United States. We see that they're hugely successful in Asia, right, with Metaplanet in Japan, but in Europe, this hasn't really taken off yet. And if you look a bit more closely, the reason for that is that there is currently no Bitcoin treasury company on like a major exchange in Europe, right? So the way to think about this is that in Europe we have a couple of stock exchanges that do a lot of volume, right? That's the London Stock Exchange, it's Euronext Amsterdam, Paris, and Frankfurt. That's where most of the trading volume happens. And that's where you want to be as a Bitcoin treasury company, because then you have like kind of the full range of tools, right, that you need to really run a Bitcoin treasury company. You have an options market, you have like access to really good liquidity, people can easily trade, and so on. And all the sort of smaller Bitcoin treasury companies that exist today in Europe, they're all listed on smaller exchanges, right? So they're not listed on the main venues, respectively, in the countries that they operate in, which means that yeah, the volume there is quite low, and that it's very difficult for institutional capital to access these instruments. And institutional investors that we've spoken to or that we know, it's only really interesting for them when they can access the stock on a main exchange, because that's when it really comes with that whole toolkit that can then lead to Bitcoin backed credits and fixed income and so on. And yeah, that's what Treasury aims to do. So to really be the first on a main exchange in Europe, and of course in the Netherlands, which is great. I mean, I'm from the Netherlands, you're from the Netherlands, right? It's the home of the very first joint stock company in the world, the world's first stock exchange. So it would be great to bring Bitcoin home in that way.
Absolutely. I mean, we need more of that, like that mentality, I think. But so, can you tell me a bit about like what a treasury try to be like? What kind of Bitcoin treasury company would you more be like Metaplanet, who's creating this business income generation department, trying to pay for future dividends, or other companies like 21? Jack Mahler said, like, we're not going to the direction of digital credit. We're more focused on really like the operational side and do Bitcoin services. And from that perspective, our revenue we're put in Bitcoin, and that will be our Bitcoin yield. I guess like King Uy is with his financial background looks a bit more like Simon Garovich to me.
That's
But
right. Yeah.
yeah, so tell me where I'm wrong or tell me where I'm right, and maybe can you share something about the roadmap that you have?
Yeah,
In
definitely.
front of you.
Yeah, definitely. It's definitely the idea, right, or the thing that we think is very interesting is to essentially be that Bitcoin access vehicle, right? That essentially Metaplanet is in Japan, and that also in the early days strategy was in the United States for European investors, right? And that's interesting because like Europe is still a very like underexplored market for digital assets and for Bitcoin also. I mean, there are no Bitcoin ETFs currently on European exchanges. I mean, there are ETPs, but they're very small and really have product market fit, but no Bitcoin ETFs. European retail investors can't buy the US Bitcoin ETFs. Only institutional investors can. And there are also no major crypto stocks on any European exchanges. And then also European exchanges are quite boring, right? There are a lot of quite boring companies, very low volatility, right? Which means that, those kind of big industrial companies that most people trade in Europe, they are quite stable. Which in some ways can be a good thing, but it's for the health of a financial ecosystem, it's really not, because if there is no volatility, it means that there's also people don't really have any sort of future hopes for these stocks, right? If there's a lot of volatility, people sort of believe, wow, this company can do all these amazing things, and then maybe they adjust, okay, well, maybe not these amazing things in the next 2 years, maybe the next 5 years, and the paradigm changes. But that doesn't really happen in Europe. We don't really have these kind of tech stocks. We don't really have these kind of Max 7 stocks that have been driving a lot of the US stock market, etc. And Bitcoin can really be that. Right? For the lack of an alternative, Bitcoin can really be a very interesting tool for European institutional investors, right? And especially a Bitcoin treasury company. Basically, offers access to crypto exposure, to Bitcoin exposure, but also this story of securitizing Bitcoin, right? And that's, I think, one thing that maybe a lot of people don't know yet or don't understand yet, which is, I think, really the biggest sort of secret sauce behind Treasury, is that the European market for fixed income is the largest fixed income market in the world. There is a reason why Saylor decided to issue his first non-USD denominated instrument in euro, because he knows that the buyers are here. Right? Most of the buyers of Saylor's converts were also European. Right? You have these articles of like Allianz, right, very boring German insurer, just coming out to buy $250 million worth of like a convert offering by Strategy. So yeah, the investors are here on the fixed income side. And of course, like to be able to access them locally, right, with a local company denominated in euro, that's of course very very interesting. And then instead of the Bitcoins going to the US or going to Asia, right, in Metaplanet's case, they will stay in Europe and then hopefully fulfill this role of securing the future of our continent.
Amen. Let's keep as much in Europe as we can, and not to be too like protective, but I think we should let hear more about from us than we're doing now. So I really stand behind that cause. So yeah.
I mean, people are going to invest in these things anyway, right? Institutional investors are already investing in Strategy. So if they're already going to invest in these things anyway, then it's probably good to keep it local.
Yeah. So before we go further, I prepared some questions about the Bitcoin ethos, and I think maybe now is a good time to ask those, because you're also co-founder of the Zest protocol. So, and we started our conversation, or you started the conversation with on-chain, and we're more like the crypto native characteristics of Bitcoin. And I also want to explore where Bitcoin treasury companies can do better. So does Treasury, or do you already have thoughts about proof of reserves and custody and maybe self-custody? And can you elaborate on those topics?
Yeah, definitely. I mean, I think these are definitely interesting questions, right? Like I think we've seen this sort of question pop up about like self-custody of Bitcoin versus using a custodian, and also like some of these other questions of like, how to generate potential yield on the Bitcoin, and what does that look like, or how can Bitcoin treasury companies kind of give back to the ecosystem. Yeah, I would say that currently, or like maybe also for Bitcoiners who are listening, that when you actually start working on a Bitcoin treasury company, you realize that there are a lot of sort of rules and a lot of sort of things to abide by, and that also towards traditional investors, like the concept of Bitcoin itself is already such a crazy thing that then the concept of something like self-custody or these things are also difficult to explain, and the way to really win these people is to kind of spoon feed, sort of do things one by one, one after the other. And slowly but surely kind of, get them comfortable and build that kind of comfort into what you're doing and into Bitcoin as an asset and into all these unique properties that it has, right? For self-custody, for being able to generate yield on it and so on. But to really start with the basics. And if this really is Bitcoin's second ETF moment, right, which is kind of what I believe it is, then yeah, we should be quite careful with that, right? And we should really make the worst thing that could happen to our industry is like, if something would go wrong with one of the large Bitcoin treasury companies. So so we also owe it to the space to be quite careful. But definitely hearing that and yeah, but working on a Bitcoin treasury company has made me realize, like, yeah, they're really, it's different from just having your own coins, right? It's a very different reality, and it's much easier to be free just with your own stuff than anything that exists in a structure, right?
Yeah, but to that point, so I agree, or in the sense that I don't have the same experience that you guys have, but I can imagine all those loops that you have to go through and all the regulatory necessities you have to abide by. But I like that the fact that Strike or 21, I should say 121 because it's not Strike yet. But like they announced these, like their mempool.space a subdomain that you really can track their Bitcoin on chain. So like these,
Yeah, I saw that. Yeah,
little improvements, I like companies who are doing that, and maybe forcing other companies to also think it that way. Like we saw El Salvador doing the same thing, the government. Like I think Bitcoin is designed to do that. And yeah, I think it's a good thing just to, because
definitely. Yeah. No, yeah, I totally agree with that. I think it's a really nice touch, right? So, because it's also in a way you can kind of show these traditional investors like what a unique asset it is, right? It's like, no, you don't have to wait for the quarterly accounts. Like you can press this button and you can see it in real time, right? It's really, really a great thing.
Yeah, absolutely. So and another point that I think a lot of people are underappreciating about Strategy is that they're really transparent with all their data. They're really trying to like raise the bar, like raise the benchmark for communicating with the investors, to give data like as much as they could. They invite analysts to talk after their quarterly earnings. They ask them, or the analysts can ask them non-scripted questions. They just say, all right, ask whatever you want, ask the difficult question. They incentivize those analysts to ask the hard questions. So I think for everyone who's thinking in terms of Ponzi scheme, and maybe it's speculative, but I think they're so pushing towards transparency and to, I think we haven't seen that yet, and I think that's a great way forward.
Yeah. I mean, Bitcoiners are the best people in the world to keep you accountable, right? To buy Bitcoin and to hold it for a significant period of time, through all the trials and tribulations, that really takes a special kind of person to be able to do that. And yeah, so in that sense, like, when it comes to transparency, this is like definitely the right base to have. And yeah, so all I can say is like, I'm with that. I'm with I very, very much in that ethos. But yeah, I think also for Treasury, it's also a bit looking, okay, what are the others doing? What are the different things that are being considered, and making sure to stick to the best practices and then really excel on the European side, of course.
Yeah. So what do you think is the ultimate form of a treasury company? Or maybe not the ultimate form, because maybe that's too far out, but where do you see them develop to? I heard you talking about on this topic on some panels you were on, but maybe you can elaborate on that here too.
Yeah, no, absolutely. I guess to your question, right? So what is the future of Bitcoin treasury companies? I think, like, first of all, this term of a Bitcoin treasury company, I think it's going to disappear, because you have a lot of different companies that do something with Bitcoin, that have it on their balance sheet, that do all kinds of different things, right? Like 21, that's building businesses around Bitcoin, and then like, say strategy is actually, issuing digital credit. And in many ways, like most business models in the world will be based around Bitcoin in some way or another. So sort of every company will become a Bitcoin treasury company with this term that we have today. But I think the main companies, or the major ones that we think of, right, like Strategy, like Metaplanet, right, the ones that measure themselves into multiple to NAV, and how they can kind of grow their Bitcoin and Bitcoin per share. I think the future for those companies is really on the fixed income side. So it's really about plugging Bitcoin into the kind of fixed income or the debt stack of the world. Like most of the financial transactions that happen today or over the past 10 years are all about refinancing debt. Right? We live in this kind of crazy, debt driven world that it's come from somewhere, but we live in it today. And to really fix the money, fix the world, right, we need to go in there and go into that system and create a much higher quality debt asset that has never existed before, right, backed by Bitcoin, which is essentially what Saylor is really spearheading. And I think that will create like a huge or create a whole new, tap a whole new, part of the asset management ecosystem, right? Because as you have equity investors that could suddenly invest into Bitcoin through the Bitcoin ETFs, you will now have fixed income investors, which is similar in size to equity investors, and in Europe it's probably twice as big. Right? Let's be honest. Like most of European wealth is allocated to fixed income, and those can then suddenly access Bitcoin as well in a jacket that they are, or in a form that they are, that fits their mandate, right? And yeah, that's a really unique thing that Bitcoin treasury companies can do, and that's where there is really huge amounts of growth ahead.
Yeah, I think that's a good segue into another topic that I want to discuss with you, because to me, the year 2025 feels different than the years before if I look to Strategy, because in the years before, like in 2020, they bought Bitcoin with their own cash. Then they found out, well, like this is good for our stock, this is good for our brand, let's do this more. So they gone out and raised capital, mainly through debt, and later on also the ATM of the common stock. But to me, in that entire period, it feels like it was like this one-sided approach from them. They wanted to raise capital. They went to a Silvergate bank, got a Bitcoin-backed loan just to increase their stack. Now with the digital credit, it feels more like they're offering a product, like you said before in the start of this conversation. So it feels more, it now almost becomes like this win-win situation. They raise capital, but they also offering something that others would like to buy. And that's what basically you're alluding to. Like, we need to upgrade our credit instruments. And yeah, maybe do you got like these examples of companies who are willing to buy, or maybe were mandatory to buy these products?
Yeah, absolutely. And that's a really interesting point that you made there, right? Because actually, like Strategy kind of did that. Like they were already creating products that other people wanted to buy, but they were not public, right? So what you're talking about with Silvergate is like they go to Silvergate, and Silvergate is like, well, we would love to buy some convertible debt from you. And then we give you some cash and you can buy Bitcoin. And yeah, then there's all kinds of ways that an investor like Silvergate back in the day could make money on that. But yeah, you're right. Now they're issuing these public instruments, right? And they're kind of like IPOing them with different tickers, right? So STRC is like the most common one, right? It pays like 10% or a bit over 10% in yield just on cash. So the idea is just like 10% yield on dollars. And then Strategy uses the proceeds to buy Bitcoin. And then obviously the idea is like, yeah, Bitcoin vastly outperforms 10% a year. So this is a good trade. And yeah, the kind of investor that's interested in these kind of instruments is a fixed income investor, right? And that's not really so much like an individual. These are more institutions, right? Entities. And the way to understand this, I think also for you, but like, people with a European lens, is that most of, our wealth in Europe is in pension funds and insurance companies, right? So, a lot of the savings also in the Netherlands, right? It's in pension funds, right? People don't have it in their own pocket. They get some pension someday, and it's kind of hidden away. And the same with insurance, right? Either it's life insurance or it's like an insurance of, you get like a payout if something bad happens. But that also means that a lot of capital is kind of sitting in a pool, and that capital needs to be managed for payouts. Right. So because if people retire, then they want certain cash reliably every month. Right. So the closer you get to the retirement age, or the closer it gets to payouts, right, for an insurance fund, they need to hold certain assets that reliably produce cash. Right. So maybe in the beginning, when you're just like a younger guy like us, right, the pension fund would be like, okay, we can invest that for the long term because they won't need that for a while. But then, as we get like 60 years old, they're like, okay, let's take it out of riskier things, right, or more volatile investments, right, like equities, and let's put it into fixed income so that it produces more of a fixed rate that then you can retire from. Well, that's great, right? But then the instruments that these people have at their disposal to buy today are not very good, right? Because you basically have we have government debt, right? Well, that's probably the most safe investment, but it doesn't produce that much in yields, right? In Europe, it's about 2%. In Japan, it's quite close to zero. In the United States, it's like 3.75 right now, but also coming down. So you need to have other kind of instruments if you want to get a good payout for someone's pension. And these instruments are usually corporate debt. But what you now have is that you have a company that's, creating debt in order to, drive value to their equity holders, right? And usually there's all kinds of shenanigans going on there with corporate debt, right? Like a big company is trying to issue debts, but, they're kind of like hiding certain things, or they're kind of like, making their balance sheet look a bit better than it really is. And this is a really opaque market, and it's quite difficult to deal with. And the rates are really not that great, right? So maybe, in Europe you get like 6, 7, 8%, depends on how sort of risky, it is. But this is a huge market, right? There's like billions and billions and billions allocated to this every year. So to give these kind of investors some, instrument that's backed by Bitcoin is, well, for one, in the beginning, it will just be a diversification thing, right? It's like, hey, you have your debt portfolio. You are currently fully exposed to the economy. Maybe you want to be exposed a bit to hard assets, and here is this sort of Bitcoin-backed debt instrument, right? But then down the line, I think they'll realize, like, wow, these are really superior instruments, right? Like Strategy's STRC is yielding 10%. That's actually that's very good risk return, right? It's much better than the 8% thing that I got from this company, where I don't really know what their management is doing, and they're kind of trying to hide things from me in their quarterly reports and so on and so forth. And we don't even have a dashboard where I could check real time how the holdings are doing and so on, right? So that's really what the opportunity is. And then also, like, for private investors, it can create these instruments like STRC, right? You can also just like put idle cash in, right? If you have some savings because you have a rainy day fund, right? Like in case your car breaks down or something, you can use these instruments to get some good upside, but not have the full volatility of Bitcoin.
Yeah, I think it's very unique that there are now credit instruments that are over collateralized instead of like under. They're transparent. Like you can measure risk 24/7 almost, and just like you said, they're not. It's not opaque. There's not a warehouse full of inventory that there might be a value in it, or maybe it's leaking water, and like the
Exactly.
half of the inventory is worth zero, and then so I mean that's incredible, and I think a lot of people are missing the point that because they think it's just another way that Strategy is raising capital, and it is, but it's also like that product where you're talking about that there's just a lot of demand for these products that are better than the current ones. And I think Bitcoin Treasury companies as Strategy and MetaPlanet and Strive are trying to build these products that are better and are offering
Yeah.
a great deal. It's like people say like a Bitcoin is the hurdle rate, but it's almost like Bitcoin is the hurdle rate for equity, and digital credit is the hurdle rate for credit instruments.
Yeah. I mean, Bitcoin is the hurdle rate, and it can be applied to equity, but now it can also be applied to credit. And then, yeah, like to your point, I think it makes a lot of sense to be that a lot of Bitcoiners don't understand this, because it's kind of comes to this thing that we talked about before, right? You have like the Bitcoiner, the people who understand Bitcoin, and then the people who understand credit. But if you like Bitcoin, you kind of understand that we live in a debt-driven world, and that credit is not like necessarily a good thing. So people who invest in Bitcoin are not really your average credit investor, right? And your average credit investor is also not your average Bitcoin investor.
No, they're opposite.
Definitely not, right? It's the complete opposite. But Bitcoin can create a lot of value for credit investors, maybe without them really noticing or even needing to know, really. And yeah, that's really where the power of this sits. But that's also why it's a bit this hidden truth, right?
Yeah.
Because there are just not that many people that understand, both of these things, right? There's also a lot of theories actually about, I think, to bring it back to Satoshi Nakamoto, right? About who he is, because what Satoshi Nakamoto did is he kind of took some concepts of cryptography that were very well understood and very well researched, and combined it with some really cutting edge stuff from game theory, right? And kind of combined like two fields that, people who only knew cryptography were not seeing that, people who only knew game theory were not seeing that, and could sort of bring that together, right? And that's really where you get innovation, or you get some, exciting new thing, is where, in some kind of crossover between two spaces that few people understand both sides of.
Yeah, and I wasn't planning to ask you this, but this is talking about opposites. There's also like this dichotomy between the preferred equity and the common equity, because what's good for the common equity holders is the company like issuing more preferreds, buying Bitcoin, get them more amplification. But for the preferred shareholders, they like more common stock dilution, buying Bitcoin, so their credit rating goes up. Like it's the same opposites. It's like the same dichotomy. I think Bitcoin Treasury companies and you as a head of strategy are needing to balance those forces, and also the
Definitely,
shareholders be behind it.
Definitely. I mean, there's a lot of things to manage there, but that's true. Yeah, like there are different investors for these different instruments, and they kind of have different incentives, right? Different things that they like to see, and then it's of course up to the management team to, to effectively and successfully like balance those interests, right? Because like in the end, if the preferred shareholders are very unhappy, then that's also quite bad for the people who hold the common stock. If the holders of the common stock are very unhappy, that's also not very good for the people who hold the preferred stock. So they're kind of a bit in the same boat.
So and
in the end,
in the extremes, they're on the same side, but in the middle, there's like this tension coming.
Exactly. No, I think so too. I think so too, and I think we're going to see some interesting developments happening there, right? So I think it's quite likely that maybe at some point in the future, Metaplanet or Strategy are maybe going to play with the interest rates, right, on the preferred equities, because currently they're quite high because they're quite new, especially on the Strategy side. But as interest rates come down, I think these rates will really also come down, or will be brought down a little bit, and that could create some kind of friction. So yeah, I think I'm going to be pretty same as you, going to be very interested to see what's exactly going to happen there and how investors are going to respond. I mean, in many ways, we're watching like a live experiment, right? So that's what's so exciting about it.
Yeah. So we're already nearing like the hour. So I think we should wrap it up. Are there things that I didn't ask that you want to cover?
No, I think we really went like full circle, right? Like deep into the treasury company space. I guess we haven't really spoken so much about on-chain finance and Zest protocol and how to make Bitcoin programmable and so on. But we can save that for another time.
All right,
because most a lot of my energy is also is going there, or most of my energy also I would say. So but yeah, it's just very exciting to. Yeah, it's always very exciting to talk about Bitcoin in all its forms. So yeah, very, very happy that we had the opportunity to do so.
Yeah, so thank you for coming on. Where can people find you?
Yeah, I think the main place to find me is on X, so at Tycho Onnasch, and there under tycho.btc, and yeah, tweeting about all things Treasury, both for Ramble Bitcoin on chain as well as Bitcoin in the traditional finance lens. And yeah, so definitely make sure to find me there. Also, feel free to send me a message if you want to connect or something. That's the way to do it. And yeah, looking forward to doing so.
Awesome. So thank you. I will put your handle and so in the show notes. And again, thank you for coming on. And I would be honored to have you on next time, maybe when Treasury went through their reverse listing, and then we can talk about more of this.
Yeah, definitely. We'll have a lot to talk about the coming time. So
yeah, right.
Yeah, looking forward to it.
All right. Thank you.